Welcome back, guys. If you're new here, welcome. I'm very excited to go through all this charting with you. I hope the video last week really helped, and I hope that the charting makes a little bit more sense, and you were able to get a little better understanding of that type of stuff. And I hope you got comfortable with the charting because we'll be moving on from there. We're going to be going into patterns like I promised this week. So let's dive right in. So this is going to be the S&P 500 back in March, and going forward, this is actually a slideshow, and I apologize, but I had to make all these patterns so you can actually look all this stuff up. And we'll be going to the progression as of current day is where we're gonna be ending, and we'll be ending with the RSI itself. So it's gonna be cool. I'm excited. So let's get started. So this is gonna be an ascending a rising wedge. So that's going to be a bearish pattern technically. And when I say something's bearish or bullish, don't look at it as that is gospel. I like to actually ignore all of that noise and treat it as noise, because this could have broken up from here. Like, we could continue to shot up. We could also, but we did shoot down. But just look at it as a major move is coming, and you got to be prepared to be for one way or another. But that helps you trade on clarity. And for me, once I learned how to trade on clarity, that was huge. So don't try to trade based off of emotion, because you're going to end up buying tops. Trade off of how clear things are, and you'll be amazed how easy it is once you know the rules of the game, so to speak. But with a rising wedge, the characteristics that it has is you have these long wicks, right here. It starts out these long wicks, and then it starts coiling, big coils, right? But then it starts getting, these wicks get all smaller towards the end, right? So then they're tiny. That means the price doesn't really know where to go at that point in time. So it's going to break up or it's going to break down. Now, we broke down. This was about a 5% move on the S&P 500 at the time. So it was a big breakdown. So because this is, look at the time frame on it, you're looking at, about a month, a little over a month, and then you had a big breakdown, and then you were able to, we moved on from there, so to speak. And then ultimately what happened is we moved into a channel. So we moved into something called an ascending channel. So the price moved up, and then we just moved in between these two prices here. So I'm going to talk a lot about support and resistance. That's going to be your two keys to being really successful. Being able to understand where the support and the resistance are at. So think of support as the floor, right? So this is your support line. This is where price is going, or excuse me, it's baseline, so to speak. And this is your resistance. So we did break up, but look how many times it touched this area, like 29.65. You can move the line up or down generally, but 1, 2, really 3, 4, 5, 6, 7, 8, 9, 10. You were in that range. And then we touched the bottom maybe once. So looking at that, what does that tell you? Hey, this is really bullish because we're just riding the top of this channel, and that's a bullish sign, and yes, it can break down and then we can go down further because, buyers can get exhausted. But, again, like when you're seeing stuff like this where, it's slowly starting to rise up, yes, but I always like to wait for the breakout and then for the retest. So you can see here that it retested. You want that resistance to flip into support. So you wait for it to break out, and then you wait for it to test. Don't buy right after the breakout, because you can have something called a fake breakout, so a fake out. But you can see that it tested it here. So, and then you can buy, and we'll be going through that more in detail with specific stocks. But I like to trade, and I like to look at channels and just keep the charts simple. That usually does a great job. So when you're first starting out, I like to just look at things as a channel. You could break that wedge. Remember that wedge that we had in the I just looked at. You can break that into a channel too. You could really say, okay, we're trading in between here and here, but it's easier to draw a wedge sometimes too. So it is your personal preference on some of this type of stuff, but just understanding those things and to look for them, the more you can see this and with clarity, the better off you're going to be. So let's move on. So we ended up going into a rising channel. So this is how basically the whole entire normal market conditions it performs. You have a channel that it trades in between, and then it's rising. But what's really nice about this type of technical analysis is that you see this line here that I'm stabbing it through. That's the average price, so that's be like fair price. But when you're up here, you don't want to be buying up here, right? Because it's going to come back down and test this line. So you don't want to be buying tops. And as soon as you buy the bottom, that's half the battle. So to figure out how to buy a bottom and where we're at, you just draw your lines and then figure out where we're at. So you don't want to be buying right now because you're at the top of this channel. Now, do you want to wait? Yeah. Could we go up like parabolic? Yes, you could. And then you just wait for a retest and then you buy again. So you can always buy, right? But when you're buying at the wrong time, being clear on when you're buying and understanding when you're buying is huge. Don't blindly buy. That's when you start gambling and not investing. There's a big difference there. So let's move on. So this, and we'll go back to the S&P 500, guys, once we go into current market conditions. But that was the evolution of a few technical analysis that happened within the last 6 to 9 months, right? This is Qualcomm, and when they released earnings and they had the announcement that they had a partnership with Huawei, so the Chinese manufacturer of phones, and there's something called a bull flag here. So you have the pole, right? And then it's like a flag waving in the wind. So you'll go up parabolically, go test down at some point in time. It could come down here and then come back up too, but it just it coils a little bit, and then you just wait for that test. So you don't ever chase a parabolic move. And I'm going to say that again: don't chase a parabolic move. You're gonna get wrecked. So it went parabolic here. You don't want to be buying here. Now, would it worked out here? Yeah, but you don't know where price is going. Like, you have the volume that I was talking about last week, but eventually it could come down in a few days, and then all of a sudden, you're at a 10 to 15% loss in a week. Nobody wants that. So you wait for it to test. So you waited a couple of days. So you wanted to see hey, where is this new resistance line? So it went up, right? And it'll always come down. And then it came down and it tested this for 2 days. So you buy in at 106, right? Because it tested it here, and then it tested it here again, and then we've been rising ever since. So that's another big technical indicator, and also helps you when big news comes out and you want to buy a stock, right? Because this was a big deal for Qualcomm. Huawei's one of the second largest manufacturers of phones, I think, in the world. So that's a big deal with their 5G chips. So that's something I got in on, not financial advice, but I bought right here because I thought, hey, this is something I want, and this sounds in the future, sounds like something that would be really good long term. So this is Boeing, and this is something called a head and shoulders. And what it is it's a head and shoulders on the chart. So you have the head here, right? And shoulder, and this is over a year, guys. So you have September of 2018, and this channel went, and if we expand it out, went all the way to February of 2020. But you had this huge head and shoulders that was playing out for over a year, and It was slowly creeping down. If we expanded this chart, it was going down to like 300. I think at some point in time. So it was already, the cold and shoulders was already starting to play out before the virus. But if this was normal market conditions and people are still flying and things were going great, where would Boeing be, right? So it's at 172 right now, but would it be at what, 280, 300? And then when you had the new plane in the air, the 747 or the 737 Max, come back up online, where would the stock be? It would be, you'd be looking pretty solid, right? And that would be a good buy, because you'd be like, oh, I'm okay with a loss. I know that it can come down, but just knowing that there's a head and shoulders here helps you because the risk that's involved and gives you another piece of that puzzle. Like, hey, maybe this is something I do want to buy. I know that it's not a good chart, but I really like it. Just know, like, hey, if it starts playing out and you can see that, there's something called the neckline, right? So the neckline was right around the 330. Maybe if you get to the 300, which is some resistance here, you see that too. You're like, I'm out. You always have your stop loss. So a price, when you buy, know when you're going to be getting out. Always have a plan and when you're going to be getting out and then when you want to get in. And I'm starting to teach you on when to get in. And next week, we're going to be going through more of macro, with picking stocks. So that's what we're going to be starting with, and then we'll be evolving from there. So let's move on. This is, and I apologize. This is Bitcoin, actually. It's something I'm really passionate about. So if you guys are interested in it, do some additional research. It's really cool how that plays out. But you can't get this on Fidelity. This is the reason why I did this, and I apologize about my poor drawing here. But this is a falling wedge, and this is a bullish pattern. But what I wanted to show you here is volatility. So like, if you have something, and sticking with your plan, right? So if you have something that you bought, 10,000, or you even bought, right? Yeah, 10,000, right? So it went all the way up to maybe 10,200, 300, up here, you can see it touched 500. So maybe you bought a top on accident, or you're at 10,000 on average, and then you're almost at a 10% loss down here. Now, was I worried? Did I buy up there? No, but would you be worried in theory if you're at a 10% loss? That's a big loss, especially once you get building a larger portfolio and you have thousands of dollars online, and you're losing a couple of $1,000, and that stings. What can help you stick with your plan? Well, these technical analysis helps because you can see the wicks are getting smaller, right? And then it's a falling wedge. So big move up or down is coming, right? So you just got to stick with it. Like, hey, I got to play this out. This is something I want to do. And then we broke out, right, into a bull flag. And then we've been in this channel ever since. So, and then again, the longer this plays out, the bigger the move. So this was like about over a month, right? So, my Tesla example before, if you do study that, I know that they did the stock split, so it might be a little bit different, but, it was trading in between $200 to $300 a share. It did touch 400 a couple times, but for about 5 years. And then all of a sudden we've gone parabolic. It's because that the technical analysis or those patterns played out for that long. So, if you see a pattern like that and you see something that's played out for 5 years and all of a sudden you break out of this multi-year resistance, that's going to be a huge move. So you want to get in on it. Now, are those hard to find? Yes. But once you see them and you're just looking through charts all the time, you get more comfortable with identifying them. But if you can identify them, that's where you make money. So understanding, so to speak, the language of the markets really helps. So this is something called a cup and handle. And it's like a cup and a handle. So it trades down, so it falls down, right? And then it comes right back up, so it makes the cup. And then there's a wedge. It's usually a falling wedge, because if you have a rising wedge, it looks a little weird, but some sort of wedge. And then it's don't think a cup and handle is something down here where you have an awkward cup. Like, it needs to come relatively within the same price range as your when it fell down, and it broke out, and we've been going parabolic ever since. So that is the end of the slideshow. So let's go to the S&P 500 on where we're at right now. So this is something called the relative strength index. So it takes a mathematical equation of a previous rolling average and comes up with a chart on basically where that is. And I don't want to go into the math on that because that's really complex, but do your due diligence. And we're going back almost 6 to 9 months here, and you can see when the sell-off happened. You had the big down play here, and you should see where you could have bought before, right? Because it went below. Now, we're way above here right now, so we're going crazy high with the markets. Now, do you want to buy here? It's dangerous. You could. I can make an argument for it right now, but for being new and learning, and stick with your indicators. What is this telling you? Stick with the charts. Be a slave. What they say, be a slave to the tape. Your charts are telling you, hey, it's too expensive right now. Could we keep going higher and higher and higher? Yes, but we're not going to go over this RSI for ever. Like, it's going to come back down with these parameters. The market's always traded within this RSI. Like, we can go back, let's go back even 10 years, guys. And you can see here, right? We've traded within this range. 2018, look at that. Remember that sell-off? And then it was way above the RSI, and then we went way down. We had a crash. So we were just way overbought, and we're up here now too. So, and you can see where you should have bought too. So you just look at that stuff and see where we're at. So let's go back to the 6-month time frame, or on the daily frequency. Let's go to the MACD. I do like that one as well, and that's the other one that I primarily trade off of. Let's get rid of this guy. So I like this because it tells you when you should be buying and when you should be selling. And when you don't have a whole lot of volatility and you're just going up, it's hard to read. But what's really nice is, like, you look at the sell-off here in March, right? It's where it crashed. And you saw something called a golden cross. So it's when the moving average crosses usually like a 20-week moving average. So this is like a 14-day. And then all of a sudden you're like, oh, so the average is starting to cross. There's something called a death cross too, and that's when it crosses down the other way. So you should, when we're below this, and ideally you should be buying, right? But also be cautious because you can always go lower. And then this is the volume. So that's the negative volume or the positive volume for the day. So how much selling versus buying was going on. But keep that in mind. Homework for this week, guys, just study a few stocks and feel free to bring them to me. And I would love to go over them with you if you have any questions with them. If you have any questions with what I brought up today, feel free to leave them in the comment section below. Otherwise, don't hesitate to smash that like button, subscribe if you like the content, and peace out till next time, guys.